A. Balasubramanian is CEO at Birla Sun Life AMC. He's with me here in our studios. Bala, good morning. Great to have you with us here. Thanks for your time. Did you expect this rally, Bala? This big move?
Yeah, I think, Prashant, we have been maintaining a view for quite some time that the overall equity outlook would get better. Purely on the basis of a few things. One, the very fact that we have seen actually some bit of recovery that is coming in the global market clearly indicates that economic recovery supported by some bit of sentiment improvement in India could potentially bring in more money into the equity market. That we have been seeing actually for quite some time. So I think we turned to very frank bullish in the equity market post September 2013 when the entire RBI move of hiking interest rates came into place. And since then we have seen actually reasonably good flow that is coming into the market. The fact of the matter is, in the last few weeks, a lot of the expectations getting built up on the political outcome. And second is, people also have been looking at India investing as actually a better alternative to their investments in China, and so on and so forth. We also seen as a result of that a significant flow coming into the market from foreign institutional investors. And some of the expectations are still getting built in. Which is purely on the basis of what we are seeing actually the global economy could eventually actually increase the exposure to the emerging market, and within that there is an expectation that India would probably get a disproportionate share of the emerging market inflows. So it's a function of at this point of time is a function of flows, it's a function of improvement in sentiment, it's also the function of some sense in the hope, and all combination put together we have seen actually the whole sentiment towards equity investing is very good. And you will not believe me that we just did about 3 weeks back an equity conclave, the first time in the mutual fund industries we did, inviting all our channel partners across the country, only talk about an equity the whole day event we had kept, with a good mix of speakers coming from my internal team as well as from the external speakers who are largely promoting India equity to the overseas investors as well as the domestic institutional investors. And the first time ever I saw actually the good vibes coming from the whole crowd, that yes, it's somebody I think was actually willing to listen to equity as an asset class for them to invest. And second is they're also a bit surprised the whole move of the last 6 months has been missed actually by most of the domestic investors. And there was some bit of feeling which was also emerging out of the whole conference here, in the sense that equity as an investments need to get accepted, given the fact that we will probably see at the verge of an economic recovery path.
But Bala, is it that positive vibe and feedback that you got, right? People who are finally ready to accept equities, and that's a good thing. But that could purely just be a function of the last 400-500 points, which has come very fast, right? A rising tide kind of lifts all boats, as they say. Risk lifts sentiment as well. But what happens might not necessarily depend on how people are feeling. That will depend on the economic reality, which is still looking pretty dire.
Yeah.
A lot has improved, as we have discussed in our past interactions as well.
True.
But maybe the best of the improvement is already behind.
Yeah, I think you would have to look at it from 2 angles. One, what you said is right. I think when the momentum is coming back, the sentiment also do improve, and there's always a feeling at a very point of time. This has to be measured in the form of how people react actually to the improvement in the market. And many times I have seen in the past that euphoria, of course, is there in the market, but that not necessarily actually is backed by the flow of money coming to the market. And we have clearly seen actually that say the significant participations in this entire move, has it come from the domestic investors? Not really actually. It's come largely from the global investors. And we still have the lot of expectation which is there for the next 3 to 6 months. One, from the point of view of political outcome, and subsequent to that, what the kind of strategy that need to get built to get the economic growth back to normal in the next 2 to 3 years with respect to the investments demand picking up. All those policy frameworks also will in some sense drive actually the overall expectations as we move forward. The question is, should you look at the next 3 months or 6 months, or should you look at actually the next 3 years of market? I think one of the assumptions which we have on the base of detailed research which we have done, we will on the base of where is an inflection point. Clearly where we are currently, and clearly where the lot of decisions that have been taken in the last 3 months with respect to getting back on economic growth and supported by the stable government, we may probably in all probability get into the 3 years of bull market in equity, which also may get sufficient support as we move into the second half of the next year, with RBI monetary policy in some sense begin to support. In case there is inflation comes down, then there could be support come from the form of reduction in the rates as well.
So what you're saying, and correct me if I'm wrong, just to paraphrase you, you're saying 3 years of a bull market. We maybe are on the cusp of that. Is that what you're saying?
Exactly.
That's, I mean, if it happens, it's great. But can you just go in a bit deeper? So which period would you compare this to? What we are seeing right now, is this 97, 98 or so, when we were coming out of a period of big underperformance, and then correcting that underperformance eventually we landed into bubble zone 99, 2000. Are we going to see a repeat of that, or it's just completely a new cycle? I mean, every bull market is a new one, new reasons, etc. What is your sense?
I think our sense is we'll probably get into the new cycle. I think we'll have to look at everything is in some pockets. The last maybe 20 years, at different pockets, we have seen actually different kind of behavior of the market, right from the technology boom to the and so on and so forth. But if you look at the last 1.5 years, which we have been of course saying for quite some time, that we have gone through actually the structural multiple changes that has come actually in the country, especially at a time when the global economic challenges were also quite high. In the challenging environment, what has been done actually is more of structural nature, would only benefit actually the country in the next few years. I think what need actually the country at this point of time is the higher level of focus in the form of an execution policy from the government of India as well as from the respective state governments to actually revive the economic growth back to normal through encouraging more and more investments in manufacturing and other sectors. So which is what I think would be able to achieve, we'll be able to get that provided we have actually some bit of high level of focus coming from every pockets of the country, which is what I think makes us believe that what we have not done in the last 2 to 3 years with respect to the economic growth, we will probably see that coming in the next few years. That is one. Second is we also believe that while of course looking at India on a standalone basis looks to be somewhat different, but most of the international guys when we speak, and most of them believe that whichever country you go actually in the emerging market, India problem is not as big as what is made out to be. And every market is going through a tough times, including the China, one of the largest economy in emerging market. So if that's being the case, that's the belief which is there in global investors, there is a high probability that the foreign investors would probably look at India much more in a meaningful manner than even what they've done in the past. The last, of course, is coming actually the biggest comfort for the market is actually the volatility which we earlier witnessed in the currency market that got killed substantially. And today the currency volatility has gone down so sharply. We will probably see this as a big fundamental change, that the volatility getting reduced significantly actually increases the prediction for whether it is rupee dollar movement or with respect to the interest rates or with respect to even the policy framework that could actually get rolled out as we move forward. This is a combination of multiple things. So it could be very difficult, of course, take a call that in the short term the market will go up or maybe even come down. There could even be corrections, I think, post-election, because once the election results are out, anyway the market will start saying it was any case known to us. I think we'll have to look beyond that and see actually what could potentially happen in the next 2-3 years.
Yeah. So the entire hypothesis is built on the market getting exactly what it wants out of elections, or you think, you know, broadly if it gets what it wants, shape and size of the government, it's fine? I mean, you know, what you're saying will happen, will pan out, irrespective. What's your sense?
I think where we might see where we would need actually a stable government, one from the point of view of having a stable fiscal policy. The last few quarters we have achieved reasonably good success with respect to having a stable monetary policy, and it need to also get sufficiently supported by a credible fiscal policy.
Yeah, but my point is, but that will only be wiser in hindsight, right? Whether the new government is being responsible fiscally, this, that, the other, that will only know after the event or as it happens. But you are making a call that we are at the cusp of a new bull market. So are you saying that polls are predicting a BJP government, that they will be all the things which are needed from the government side for a new bull market, they will be that? You're making that call now? Or are you saying, you know, there are a lot of ifs, and it's not certain that we will have that bull run? What's your sense?
Yeah, I think Prashant, clearly what you're saying is in some sense is right, in the sense that irrespective of whichever the government comes, I think what is the most need of the country at this point of time is one, is stability at the central government level, and second is there is a reasonably certainty that is needed from the point of view of various policy making initiatives to attract the private investment, as well as the policies towards increasing the spending from the public sectors to drive actually the growth path as we move forward. Clearly, I think these are some of the things which is need of the hour. This will always come only if there is a stable government who actually has got some bit of vision for them to get back on the growth path. I think clearly nobody has questions today at 4.5%. Anybody who comes actually at the center has to actually put all the efforts to get back on 5.5 to 6% kind of growth path. I think we are already at such a stage, we are such a low level, it can only get better from here. That's one assumption which I think easily one has to make. All the other ifs and buts will always be answered only if there is some bit of stability with respect to various policy framework. I think where we bring in very significant advantage in the recent last 4 or 5 months is some of the regulatory measures that has come. All of them are actually more in the nature of supporting actually the growth, as well as the nature of reducing actually risk in the systems and reduce the subsidies. One is such instance is actually the deregulation of petrol and diesel prices. Second is deregulation of the electricity tariff that has come in very recently. A CER's judgment which has allowed actually the tariff increase for UMPP producers. These are some of the things I think are more in the fundamental nature, could only help actually as we move forward with respect to changing, actually bringing the necessary change in the whole outlook for various sectors that are supposed to be the driver of the economic growth.
Yeah. You're a long only fund, so you're in the market, right? That's the advantage.
True.
You don't have to keep second guessing whether we should be. Of course, you can go into cash, but you don't go into cash massively, significantly. You're always there in the market. So that's fine. So what's your sense? What will do you want to take a shot at which sectors will be the drivers of this bullish phase that lies ahead, Bala?
Yeah. I think clearly, Prashant, we of course keep discussing internally at every quarter and the every beginning of the year. Clearly, 3-4 sectors which we believe that, irrespective of whatever the government, irrespective of what happens in the domestic economy, will continue to do well. Is something related to exports, which is the software companies, IT and IT related sectors. We believe that will continue to do well, given the fact that they will also get to participate in the global growth. And second is the banking and financial services sectors is actually the biggest proxy for the Indian economy, whichever we look at it. There has always been a question mark with respect to what to buy in the segment, but rather than saying whether at all one should own in the segment actually. That's actually clearly differentiated between whether we should have ownership in private sector banks or public sector banks and so on and so forth. But clearly I think we see actually this segment will continue to remain the proxy to the Indian economy, and that sectors will continue to stay neutral value to the index, which is almost about 23-24%, which is the representation in the index. The second, of course, where we see some bit of recovery which is coming in last 4 or 5 months, we have also been adding up exposure to that segment, which is the capital goods sectors. I think any recovery growth will come back in the economy, ultimately will drive actually the investments, which ultimately lead to actually significant benefit for domestic manufacturing companies, which are largely in the name of equipment manufacturing companies, and there we are still able to find good quality companies. What we generally still avoid is something which is extremely leveraged, highly debt driven, and they are still struggling with respect to actually managing their balance sheet and deleveraging the risk in the portfolios. These are some of the companies, while it could potentially actually give reasonably good growth, more from the market price point of view, but need not necessarily be able to sustain their growth.
No, so you said equipment manufacturers.
Exactly.
In the capital goods space.
Exactly.
Right. You can't talk about names. What else? I mean, you said a couple of things. So one is techs, one is equipment manufacturers,
and banking as
banking is. So PSU is private. I mean, because there is SBI, PNB are still 50% off their highs. Most private sector banks are at new highs. So there is a real choice to be made there.
Yeah. I think we of course we have been maintaining this for quite some time, that the entire banking space, the most need of most of the times one has to keep in mind is what stocks to buy actually in the segment, which is the clearly differentiated between the private, within private and old and new private, and public sectors, and within public sectors which are well capitalized, does not need actually the fresh infusion of capital. At the same time, the book is, even if the NPAs are there, but as long as they are well capitalized, they will be able to participate in the growth. I think one has to be really choosy in that space, and we have been reasonably successful in that. And just to trace you back, I think we launched actually a banking and financial services fund in the month of December, with the assumption that that sector remains as a proxy to the economy. It gives you an opportunity for everyone to participate in the whole economic growth through actually the one single sector, which is the banking and financial services sectors. And that's why we did it, and it's actually pretty. It had given us a reasonably good satisfaction with respect to both in constructing the portfolio, as well as the way the returns have been panning out in that.
Okay, Bala, thanks very much for dropping by. Great to have you with us here as always. Thanks for coming down this morning. Thank you. A. Balasubramanian is CEO at Birla Sun Life Asset Management Company with his thoughts on the market. He thinks we are at the cusp of a new 3-year bull market. So good times lie ahead. And it's not just a call predicated on a certain government formation, getting so many number of seats. In a way, agnostic to that. We're going to take a very quick break, 16-17 points off on the Nifty. I just want you to leave you with the intraday on IDFC. Opened up 9-10%, 139 was the high. It's up just 2% now, so it's come off almost full circle. We take that break, we are right back.